Hey there, good morning, everybody. Chris Franks with Texas West Capital. It's just after 11 a.m. Central Standard Time here on Monday, the 7th of December, 2020, San Antonio, Texas. Beautiful day out, a little bit cool, but beautiful day nonetheless. Hopefully, y'all are doing well. We finally got our Christmas tree up. Got the decorations going on around everywhere. So, my son's pretty happy. Hopefully, y'all are doing well. And, if you celebrate Christmas or whatever holidays you may or may not happen to celebrate, hopefully you're having a good month so far. We're 7 days in, guys. It's finally the end of 2020. It's been a ridiculous year. But, if you do celebrate Christmas, guys, again, we're 7 days in. You run out of time. 18 days to get those presents. So get them done. Who's here already? Hey there, Greg. Good to see you. LG's here. Hank, what's up? Spiral Architect is here. Data is here. Crypto Mowgli checking in. LXT. Farm D. Crypto Mowgli, man, I saw your comment about the hot takes. He's wondering, how do you keep track of so many potential trades? Yeah, it's a lot. It's a lot, guys. I tell you, we put out a lot of content. I'm not kidding. Again, I look at what other people do. Here's the difference between what we do and what most other people do. They'll go in there, especially with stocks, and they'll give you trade setups for like $3 or $4. Our trade setups, man, we're looking for percentage. We're looking for 100%. We're looking, we may only get a 30 or 40% setup, but we're looking for large moves. And the same thing goes there, with forex and with crypto as well. So not only do we, give you setups that give you significant moves, but we give you a heck of a lot of them. So you can kind of decide what you want to do and what you don't want to do and all those things. So if you guys think I'm ever kidding about the amount of content we have, Crypto Mowgli just joined about a week ago. Ask them. They'll let you know. Hey there, LXT. Good to see you. Let me see here. What's up, Joe the Butcher? Good to see you. Aeromat checking in as well. LXT says it's 17 days for the Europeans. You celebrate Christmas on the 24th. Okay, interesting. In that case, you've got even less days. Hey, there's some guy. Good to see you checking in, bud. Been a while for sure. Hey there, Tao. Good to see you as well. Let me see here. Who else is here? Nevlusian, what's going on, man? Let me see. K1, is that KB? Hey, what's up? There you are. Yes, I see you. Let me go ahead and get rid of this idiot. I'll block them real quick. Hey, Brian, good to see you, man. I can become famous? How can I become famous? I don't know that I want to be famous. Let me see there. And then, were you saying that, Hank's saying that they do 3 days, the 24th, 25th, and 26th for Christmas over there? I believe you're in Holland, right? Am I right? Or at least over there in the Netherlands. Maybe not Holland, but in the Netherlands. Oh, I could be famous with that idiot that came on there trying to... Oh, okay, yeah. Yeah, it is what it is, right? I always seem to mess that stuff up, darn it. Hey there, Wazobia. Good to see you. Dennis is here as well. Baker, happy Monday, my friend. Let's see here. And Mechanic is here. What's up? And Offmain here, of course, as well. He offered me followers. Hank says, yeah, I know. I hate it when that happens. I make a mistake. I get all jumpy and I get rid of people who are promising me followers. Yeah, whatever. Hey, everybody. If you haven't joined us yet, be sure to join us at howtotradetowin.com. Our Black Friday, Cyber Monday deals are over, but I'm sure we're going to have something coming up here pretty soon leading into Christmas. Why not? We'll have something else. It won't be the same deals, but they'll be worth getting on it either way. So, if you kind of missed it or if you've been holding off, you'll probably have one more chance here before Christmas to get in on a pretty good deal. So just be sure you guys are following us at howtotradetowin.com, following us on Discord, following us on Twitter there at TX West Capital. We'll keep you all in the loop. Let's see here. Hey there, Pixafin. Good to see you. Let's go ahead and jump into here, guys. What's going on with Bitcoin? Nothing. Really, it's nothing different than Friday. It continues to print sideways, which increases the odds for a triangle. But remember, guys, before a lot of times when you're new to trading, you tend to get really excited about patterns before they complete, before they confirm. And then you end up getting caught because then they become something that it wasn't, right? I mean, it looks like a triangle, but it may not be. So here's what we're going to do. We've still got the same three possibilities right now. The ABC, the 1, 2, 1, 2, and then the, well, let's become a 1, 2, 1, 2 now. So the ABC in purple, the 1, 2, 1, 2 in red, or the triangle in blue, okay? So as far as the triangle goes, here's what we're looking at. We've got A down, B up, C down, D up. And right now we've got an ABC here for E. And then that happens right there on the pivot. So it makes a good argument for that potentially being E. So the way I would play this is, if price advances above the wave D swing high up here on Bitstamp, that's 19,431, you long, okay? Because your stop loss is easy. If this is a triangle, then once it breaks out above wave D, it should be good to go, and it should not get below wave E here. So you long the breakout of wave D there, and then you put your stop loss right below wave E here. So right below $19,093.35. So put it 34 cents. Just right below it. If it goes 1 penny below it, it invalidates this triangle. You know, if it gets up here. That's why I have this blue thing here. Because like I was telling the Discord this morning, if it pops up there and gets above wave D and then turns around and comes back, and, you know, it could even go up right here, you know, whatever, and comes back down below wave E, well, that invalidates that triangle there. Because remember, if you've got a triangle, your next move out of it is your last move, your final move of that wave set. So you're looking for it to get above where the triangle starts. So it should at least get above this swing high up here at 19,918 and 1 cent. It should at least get above there. So again, if it breaks above D and then doesn't get above there and curls back below E, you know, that's a pretty good sign that you need to be out of it. So the other thing we have here, oh, by the way, if it is a triangle and it does break up from here and head up, then the pattern target based on the height of the triangle off of wave E there is going to be right up here at around 20,918, right below that 1 hour R2 pivot. Now, here's my thinking, guys. I've been talking about different wave counts and everything. If this is a triangle, we get this breakout up to here, I think what we might have is this ends up being a 3 and a 4. And then this ends up, yeah, basically I'm thinking this ends up being a 3. We get a pullback down here maybe to around 17,000 as a 4. And then we have a finishing move up here toward 24,100. And I think that then ends it, if we get this move up here. Now, the other thing is, we've got two other possibilities here. Again, we have just an A and a B and then a C. And so the minimum on that C is right there around, still around that, you know, that 17,600 or so area. And that's the minimum, but, you know, C can, you know, at that point, wave C becomes equal to wave A. And we usually look for that at least, right? Now, that means wave C could actually go further, but, you know, that's just the general where we would look for it. If it's the red count, then it's a 1, 2, 1, 2. And in this case, we would be looking for price to come on down here toward about, you know, 17,400 or so for wave 3 at least. That area there. So, I mean, that's really kind of where we're looking, guys. I mean, it's really not much more difficult than that. You know, if we, from right here, if we just fall on back below wave E right here, it could suggest that wave E is still unfolding, but wave E, if we're coming down below it, still, you know, maybe still printing wave E, it cannot get below this swing low right here, this 18,500. If it gets to $18,499.99, it invalidates this as a triangle. Okay? And so then either you're left with the purple or the red count. So, I mean, really, that's the way it goes. If price breaks out above wave D and then pulls back below wave E, triangle's invalidated. If it moves down from where it's at here, down below wave C, triangle's invalidated. If it moves above wave D and continues up, then you've got your, you know, almost, what was that target? Almost $21,000 target almost. 20,918. And again, if it comes down below wave C, you should be looking for a minimum here. So if it's getting down below 18.5, you should be looking for a minimum probably around 17.6, potentially even 17.4, depending on which of those counts comes through. But again, like I said, the purple could be a further down. The idea, if this is a purple count, I'm not a big fan of it because A would be so thin, time-wise, and we're already getting this large, huge, drawn-out count here for what would be wave C. But the idea would be that wave C would probably be an ending diagonal. So you'd have to see. And if it's an ending diagonal, it has to be ABCs. So basically it'd be like A, B, and then 1, 2, 3, 4, 5 gives you C, right? So you go A, B, C for 1, A, B, C for 2. And then, you get your A, B, C for 3, A, B, C for 4 overlap. And then probably some A, B, C for 5 or something like that, where you have this ending diagonal printing out here for that purple count. Otherwise, if it's the red count, again, it's a 1, 2, 1, 2, and you should expect a strong, large wave 3 to coming down. And that would probably take it overall below, wave 3 here would be below that 17,390, 17,400 area. Because if this is a 1, 2 right here, if this is a 1, 2, 1, 2, then this as a 1, 2 right here gives you a minimum 5 down here around 17,175 or so. So that would be, 3 instead of being at 17.4 would be closer to 17,175. And so if we do that, actually that kind of brings that probably, remember this larger 1, 2, 3 has a minimum target of 16,687. So that would probably bring this whole thing, 3, probably bring your 5 down. Remember there was this discrepancy here between 5 and 3 I talked about last week. And I said, if this rate count plays out, then what's going to happen is wave 3 will probably overextend, and that'll pull wave 5 down lower and get it here where wave 3 is. And so that's what would probably happen in that case. But I see everybody jumping on their horse about the triangle. I just want you guys to understand how you correctly trade a triangle. You don't go, oh my gosh, it looks like a triangle, I'm going to go. No, don't do that, don't do that. All right? I'm terrible with impressions, so. But I find them amusing for myself. But yeah, if you're going to trade a triangle, guys, you've got to do it correctly. You've got to know what you're doing, especially an Elliott Wave triangle. And why you would try to trade any other triangle, I don't know. But Elliott Wave gives you specific areas you can look for invalidations. And that is the biggest thing that most new traders don't use. And I say new, guys, I'm going to tell you again, when I say new, you can tell me that you've been trading for 3 years. But if you've been losing money consistently for 3 years and adding more money in, you haven't been trading. You've been losing money. Okay? And you'll understand what I mean when you start trading, consistently, successfully. But, with an Elliott Wave triangle, it lets you know where those invalidation levels are. Same thing with anything Elliott Wave. And that's the big, to me, again, guys, that's the big thing about Elliott Wave. It's not necessarily projections, it's the invalidations. Think of this. When you're trading, all you're trying to do is get in the right direction. It's all you're trying to do. Everything else along the way is trying to give you these minimum and these kind of targets as you're moving. But as long as you're in the correct direction, you're going to make money. So understanding where the invalidation levels are goes a long way toward helping you remain in the correct direction or to figure out if you are in the correct direction. Think about that, guys. If you're trading, all you're really wanting to do is to be in the correct direction. Which way is the market moving? You want to be trading in that direction. As long as you can do that, most of your problems are non-existent at that point. So, again, Elliott Wave gives you those ideas of where those invalidation levels are. You can come here. It may look like a triangle. Doesn't have to be. Again, it could be a 1, 2, 1, 2. Simple as that. And you go, oh, but it's contracting here. Yeah, it's contracting, getting ready for a larger push. Remember, when in Elliott Wave, when you have what we call, these 1, 2, 1, 2s, these set up for a long, strong wave 3. Because that interior 1, 2 is setting over, it's subdividing that third wave well. going to give it that strong push. So a lot of times people think, oh, triangle, and then they get caught as it shoots the other way because they weren't expecting it to do anything else. So that's why, guys. So to understand how to trade a triangle properly will make you and save you a lot of money. Let me catch up here with you guys. Let me see here. Hank says max pain is not necessarily what we can survive right now. Phoenix has a very big buyer defending the level. Let's see here. Tether needs Bitcoin to stay high, in other words. Well, yeah, if you believe in the whole Tether narrative, that it's all fake, right? It's all fake Bitcoin now. More than what they say, Bitcoin is fake. But it's driven by Tether, kind of thing. I don't know. Hey there, Sean. Good to see you. Hank says 20,000 is defended like crazy. 18.5 is defended like crazy all season. Maybe. Thankfully, some of these exchanges, these U.S. exchanges, are starting to add more alt pairs, but the liquidity level on these. I mean, when you think back to when we were all trading Binance or Bittrex even back in the day, or Poloniex even back in the day. If you're new, you may not have any idea what Polo is. Those of you who have been around, I hear you chuckling with me right now. That's what we were doing. We had Bittrex back then, which was had a lot of volume on all the alts, and then we went over to we had Polo for a while, and then Binance came out, and Binance, man, the liquidity really shot up, which was great. We could trade a lot of alts. And then all that went out, and liquidity's just kind of left the market more or less on the different exchanges. So you guys really need to be careful if you're trading alts, because liquidity can come in fast, and it'll move that peg really fast, but it'll leave even faster. This is why I tell you, if you're new to trading, the best thing you can do, if you're trading cryptocurrencies, is trade Bitcoin. Or, if you feel like you have to have more than Bitcoin, trade Bitcoin and Ethereum. You trade trade the top 5, the ones that have the highest I say market cap, it pretty much is, the most liquidity. Because those are the ones that are going to make it so you can get in and out easier. You won't have slippage and all that kind of stuff. Not like you would on these small alts that you guys try and, every new trader's dreamer when they first come into crypto, to find that one that they can buy into it today, and then tomorrow it's up 500 times and they're able to buy a Lambo, I mean, if you guys step back for a second and think about it, it's really silly. But, it's what drives the new money coming in from retail. It's these, excessively ridiculous hopes of wealth overnight. If you guys just have some patience, man, you can make so much money as a trader. You really can. I'm living proof to tell you guys you can do it. But you absolutely have to get out of that quick mindset. You got to stop jumping around to whatever's moving at the second. You're like in one play because you get into one and you're like, oh yeah, I think this one's going to go up here. And it doesn't move as fast as you want it to. And all of a sudden something else is popping off. And so you get out of the one you're in and you get into the other one. But you're getting into the other one late. And so now you got to get out of that and get into another one. And so you're paying all these stupid fees to enter and exit trades. And a lot of them you're leaving at a loss. And next thing you know, you're losing this money that you didn't need to lose. And then the one you were originally in ends up going off, ends up taking off. And if only you had stayed in it, you'd be good to go, right? We laugh about it a little bit, guys, because I promise you, you're not special in the way that everything that you pretty much think as a new trader is the same thing everybody else does when they first come in. But that's good. You don't want to be special in that way as a new trader. You want to understand that, okay, yeah, that was pretty stupid to think that was going to happen. But I'm in great company. Everybody did that. Even the greats that are out there still trading. The important thing, guys, is to recognize that that's what's going on and then to do something about it. If you continue to do the same thing in spite of the fact that you understand that that's really just ridiculous, you're just trying to throw money away. I mean, there's no other way about it. You're being willfully ignorant. And if you're going to be willfully ignorant, why be in the market? Use your money for something that's going to give you guys memories and things. I promise you what, man, Memories and experiences, things you get to do, these last well beyond the toys out in the garage. I promise you. So, if you don't want to come in and be serious about learning how to trade, don't add liquidity to the market. Yeah, and I can say that. You're like, oh, but why would you say that? You're going to lose. No, we got a lot of people that are always going to come in, and most of y'all aren't going to listen to me when I tell you that anyway. You're going to keep providing liquidity for the rest of us. But I'm being upfront with you guys right here, telling you stuff that nobody else is going to tell you. Because everybody else wants to sell you their secret little system that's going to make you rich in 3 weeks. I keep telling you guys, there's a reason people stick with us for as long as they do. Well over 6 months on average. Well over 6 months. Again, we've got a ton of people that have been with us since day one. Over 3 years ago. You guys, you're not going to go in there and continue paying something for 3 years that isn't working for you. But it's because we're upfront and honest with you. We're trying to tell you what you need to understand as a trader so that you can be successful. So that you can be the guy or gal out there, 5 years from now still trading, making money, doing well. While you see everybody else going in and out, on crypto Twitter and everything. Let me see here. I'm going to keep catching up with you guys here. LXT, question about the morning update over for Discord. If we think this is a triangle, could we long here with the stop loss at C? And once we break out higher than D, move the stop loss up to E? Yes. Yeah, I mean, the key is, if this is a triangle here, E is your key level. Where E terminates is your key level. Once you get down under that, your advance is over. So whether you do the full advance and then come back below E, you're done. Or if you just get a little bit and then come back, and it basically invalidates your triangle. Either way, it's over once you're getting that E done. Yeah, so you could long here, put your stop loss down here at C. And then once it gets through E, you can bring your stop loss up from C to E here. And then you just hope it continues going up. But even if it doesn't, the fall back here is only a few $100s worth of movement. You just have to make sure your risk management is where it needs to be, guys. Don't be losing a ton of money on either of these stop losses. Let me see here. Let's see here. Data says, even with me stop not losing money anymore, I consider myself new. Or at least not losing the money I was. First, I need at least gray hair on my face. I've got some. Oh, man. Let me see him. Let me catch up where you guys are going here. Yeah, Elliott Wave on impulsive moves is great. It's easy. But it's like anything else. Trend trading. Trading in impulse is easy. It's all the sideways that's a pain in the rear end. I mean, as I've told you guys, as I told you last week, here's the reality of what we're doing here, guys. Pay attention here. Here's the reality of what's going on. Oh, gosh, dog it. Let me catch up here. Here we go. This is the range right here, guys. This swing high to this swing low. Or this swing low down here, that swing high. So you've got the swing low down here at 18,100 up to the swing high up here at 19,981. That $1,800, this is the range. And all we've done, zip out here, guys, zoom out a little bit. All we've done, look at this. All we've done is just trade sideways in this range here. But this is where most, new traders will find it easy to jump into a move like this. And they'll probably even make money on this. And then they'll lose it all and more with this sideways. The best thing you can do if you're a new trader is wait for a breakout above or a breakdown below. But, again, most of y'all are like, oh, well, I don't want to wait all that long. That's a lot of movement there. I'm going to miss a lot of money I could have made. Guys, listen. The key to being a trader, to being a successful trader, again, as I continue to tell you, is consistently locking in profits. If you can consistently lock in profits, most of the issues you're going to have are out of the way at that point. The only other thing you have to make sure is when you're wrong, that you have intelligent stop losses so you don't lose more money than you have to. You're not going to lose a lot of money. You don't want to lose more than 1 or 2%. If you're a new trader, you shouldn't be losing more than 1% on a trade. Yes, that means you're not going to get rich tomorrow, but it also means you're more than likely going to have have a much better chance of of increasing your capital. As long as you're trying to get rich overnight, you're going to lose your money even faster. That's the reality of it, guys. I mean, I know you don't want to hear that. I know it sucks to hear that, but that's the reality. But if you've got patience and you really want to learn how to trade, then there's a chance for you to make it. But you got to get out of all this short-term nonsense that you guys pay attention to. Don't forget right now, guys, weekly. Let's see here. Weekly, remember we printed a 9 2 weeks ago. I talked about that coming up, a few weeks coming up into it. And we're still kind of sitting here. Now, from the weekly, we've closed above this R2 pivot on a strong-ish looking candle. So now we need this candle to continue up to confirm it. If this candle turns back down and closes back down below this pivot, it makes this advance very questionable. But if this weekly can close up above here, close up again, then we've got follow through the pivot. And more likely than not, we can see some further upside. But as you can see here, you're almost topped out again here with the weekly Stochc RSI. RSI's way the heck up here at 83 or whatever, 84. If we jump to the monthly, don't forget I talked about this for a couple of months leading into it back in probably September and October coming into it. Mentioned that by December we're going to have this TD9. From a monthly, everybody's excited. And it's, I can't blame them, They're excited about this or they're excited about these two candles, right? But here's the thing. If this turns back and comes on back down here, there's absolutely nothing to be excited about anymore. Like right now, we've got just over 3 weeks left in the month, right? And I'm not saying this is going to happen, but I'm saying if it did, if price closed below this over here, below this 13,880, if the monthly came back down and closed below that, don't even think about going higher for the next few months at least. If something like that were to happen, I'm pretty sure we're headed back down here. Again, per my alternate, per my count, that has us completing this flat correction. But I don't think that's going to happen. I don't think it's going to be that easy to say, oh, we're coming down. Could, but I don't necessarily right now think that. Right now, the monthly is being held up on the R2, which is good. It's bullish. But that said, we're only 7 days into the month. That's it. So there's a lot of time left in the month here, guys. So don't get ahead of yourself on that monthly. If you're closing down here at even 15,000 or 15,500, where you're coming down halfway down this candle, that makes this move suspect here. So we'll have to see what happens. Well, maybe we get a wick up here before the end of the month, and then we see the strong drop start by the end of the month, and then January and February you have this follow through coming on. March you get a bounce. April, May, you get further fall through. By June, maybe you get a wick at the bottom, and you get this reversal maybe happening. So I could see this being some sort of 6-month play here where you're getting this, again, wick up here, and then by the end of the month you're coming down, and you're getting something like this, something like that. You can very easily see that. Again, that just, A, B is a triangle, C, B, C, and then A, B, C. And you have this down. Again, if this is actually bullish, though, this is potentially a 1, 2, 3, maybe even all the way up here toward 28,000, maybe. The triangle target or the channel target based on the height of the channel here is what? 27,200 or so based on height of the channel there. But if we have this fall through back into the channel, this looks more like just an overthrow, and it comes back in. So you get this 1, 2, 3, 4, 5 coming back down. So you got an A, B, C expanded flat. I know a lot of y'all don't believe that can happen. I know. I get it. I know y'all don't want it to happen. I get that. But until it makes enough move, with what it's doing as an advance, you got to realize that is a very real possibility still. Especially more so where it's at. And we'll have to see if it does. I mean, again, it could head up toward that 24,100 target I have. We could hit that on the move up to finish off this advance here as maybe a 5-wave advance. And then you turn around from there and get, your 5 waves back down. So, that's absolutely what you have to keep in mind, guys. Not saying it's going to happen. I'm saying if you continue to act like it doesn't have a chance, then you'll probably get caught. And maybe not on that, but on a whole bunch of other stuff, and it'll be just as bad or worse. You'll lose all your money. You have to understand what the possibilities are and not just ignore them because they don't fit what you want to happen. All right? Let me see here. Let me see. Let's see here. Can I show some setup examples? Well, no. Mondays are just Bitcoin and the DXY. Which, by the way, let's go ahead and jump over there and see. DXY having a bit of a fun little pump up here this morning. I told Discord that we were likely to see some good bit of reversal coming off the bottoms into the opening of this week, and that's what we've got here. Now we need just to see if we can get some follow through. But again, right now I still think this is potentially just a wave 3 here. Remember, we're looking at an ending diagonal. And so this is potentially a wave 3. But, again, we could have this all the way up here. This 4, I think, is right there at the daily pivot, I think. Yeah. Yeah, right there. So, I mean, it's possible we could see that. As far as your daily goes here, you've still got this large large bullish divergence. Looking for an advance through this red line would be a good clue that the bottom may be in for a bit, if not completely. But right now, I think we've got an ABC for 1, and then a 2, and then an ABC for 3, and then we should have a 4 popping back up, and then maybe an ABC down for 5. That said, my initial thought is if we're going to do this, if we have this 4 popping up here toward the pivot at about 92.5. I think 5 would probably end just below wave 3 here. If that's the count, that's what's going on there. This doesn't necessarily have to be the count, though. It could go down a bit further as well. But, again, you can't just trade just the DXY, guys. If you look at the DXY, remember the DXY is just this byproduct of what's going on with a weighted basket of other currencies. Your Euro USD, your USD CAD, your USD Swiss franc, your USD yen, and your USD cable. I mean, or your cable USD, I guess. But, it's those together with their weighted percentages that give the value at which the dollar is compared against to give you your DXY. So a lot of people go there and they're like, oh, they're just looking at the DXY. And they say, oh, well, it's got to go down to this level because it looks like an important level. Well, yeah, sure it does. But if you're skipping other important levels prior to that, I think, I don't think it's a great way to trade. You've got to watch your levels as they come up. Right now, we're around the, 2018 monthly level, I think. Let me see here. Yeah, see, right here. This is where I was talking about the bounce at, right about this 90.5 kind of area. And that's kind of where we're bouncing at the moment here. And so, again, but I think it may just be a temporary here. Again, I think it's maybe just like a 3 and then a 4, and then we still got that 5. But that 5 would get caught just a little bit below that 3. So still same area is what I'm thinking. But, it could come lower. We can make cases for lower. But until it does, I think you need to definitely be careful on that, especially with the degree to which the bearish dollar is right now. The almost record levels of bearishness against the dollar. When it comes to trading, if you guys don't know, you can be too far off sides. Retail tends to think, oh my gosh, everybody thinks it's going to go down. Everybody short the dollar, so I need to get short the dollar too. No. If everybody is short the dollar, who's left to add shorts to it? Nobody. If everybody's long Bitcoin, who's left to long it? Nobody. So you've got to be careful with all that. You can be absolutely too far off sides, and that's where you get your squeezes. When you get your short squeezes and your long squeezes. Because you're way too far off sides. There's too many people on one side of the trade. I say too many people. There's always somebody on either side of a trade. But we're talking about aggressiveness, in selling versus limit orders. We're talking about market orders and whatnot and getting up there. So, again, if everybody is too far one way, it makes it easy to send price the other way. And that's usually what happens. Things don't tend to stay off sides for too long, generally. So yeah, just be careful with all that. Let me see here. Thomas Payne. Hey, I like that. That name there, first of all. Says it feels wrong buying Amazon and Walmart stock knowing they are crushing small businesses and transferring their wealth to these megacorps. I feel you there. But at the end of the day, man, we say stuff like that, but then we all go and buy, right? How many of us actually go to a store and go, well, this mom and pop store has it here for $50, but I can get it for $30 at Walmart, but I'm still going to buy it at the mom and pop shop. Most people don't do that as it is. It's business, really. Cheaper prices are good for us overall. It allows us to be able to distribute more and create more and, more people can have, right? And yeah, it sucks, but it's like any other business though. It's technology and advances and things come through and you either keep up with them the best you can or you don't. And at some point you maybe get, run out of business basically. I don't want to sound callous about it, but that's what it means, right? That's what it means to be in business. And I think this is the thing a lot of people don't understand when they talk about their bosses and they think that they should be getting paid more. And sometimes they probably should. Many times, I've talked to a lot of people in my life. They're probably getting paid more than what they should be. But they're convinced that they're not getting paid enough. But if you're working especially for a smaller company or an independently owned company, there's all these risks. There's this potential going out of business, all these things they have to do to stay in business. Many times you think that they're just living the fat life, right? Running a business is hard, guys. That's why most people don't do it. It takes a lot of hours. Ask anybody in TWC how many hours a day I work. They'll let you know. Last night I was done at 2:30 in the morning. Up again at 7:30 this morning, looking at charts and whatever. Every day of the week. That's what I'm doing. It's a lot of risk, and a lot of things that you have to do if you're running a business. But, again, and potentially being run out of business by somebody who does it better for less, or economies of scale are better than yours. Man, it's just part of what it is, right? So, yeah, I get what you're saying. For sure. But it is what it is as far as it goes here. Now, if these companies are getting bigger because government is hampering competition, which government tends to do even though they're so antitrust and everything. Yeah, I took those fun courses in law school, antitrust law, all that fun stuff. But many times what they're trying to do ends up creating exactly what they say what they're trying to break up. Again, government regulation creates barriers to entry. So, it is what it is, right? Let me see here. Hank says the first thing he bought at the beginning of COVID was Amazon. Yeah. That Zoom was good, for sure. These online companies, how are you going to do business with everything shutting down, remote work and all that? Again, we talked about the jobs here in the U.S. We had an increase last week or for the last month, but much smaller than what was expected, but still an increase. But when we actually drill down to what kind of jobs the increase were, they were the very lowest paying jobs. And in fact, what we've seen running up till recently, till still, is the white collar jobs were going away. So your people that have the disposable income are losing their jobs. So less disposable income to go into the economy. The ones who are getting jobs are the ones that basically are having to work for not even enough to live on, or barely enough to live on. They don't have disposable income. So, you always got to be careful when you're looking at jobs numbers as well as far as an indication of how the economy's doing. But, yeah, man, Amazon, Zoom, a few others pretty good picks right after the COVID announcement. What trade in Bitcoin would you take now? Break up last high or down last low? Oh, I'd buy, if I was to trade this, I would buy a breakout of D. If we were to remain above E and go above D, I'd buy that breakout and put a stop loss below E. If we were to drop down below E, I might be willing to short down towards C, watching C, what happens here. If we get below it, well, then I'm looking probably closer down here toward, that's the low 17,000s area for wave 3. But if we were able to get a bounce prior to a reversal prior to that wave C swing low there, then that would be a good way to get out and then potentially long with again, because then this would just be E here. Let's say it came down here toward 868 here, right? 868.40. Can't even say it, 18,684 or whatever. Let's say wave E came down to there. So, you could buy that reversal off there, and you would just have to have your swing low below, or your stop loss below that. Or better yet, even below the wave C just to make sure. But again, if this keeps on getting down below wave C, then the triangle's out. So for me, it's a little bit better to wait and see here. There's no reason to rush this. It's been going sideways for days now, right? Since the beginning of December, basically. So there's no reason to actually, to jump into it before it kind of lets you know what it's going to do. Hey, Tell Your Rider, what's up, man? That's right, man. With your travel experience, they can't take that treasure from you. That's right. That's right. Alex T, you're welcome. Do I think GAN is a good indicator to use? I've never really got into it a whole lot. It's okay. I mean, I'm sure it works out pretty well. Okay, let me put it this way. I know some people that use it quite extensively and use it very well. But it's like any other way you trade, guys. You can't just keep jumping in and out of techniques. You got to get in something and use it for quite a while. You got to get a lot of time with it and understand how to use it properly. I've never used GAN a whole lot. So, but, it's one of those techniques, GAN, Elliott, Wyckoff, all those guys back around the same time, Dow, all of them, those are the big guys all coming in the same, and their stuff is still going today. The way that they traded is still being, taught and used today. So there's something to be said for it for sure. Let's see here. What do I think about a 2x top at 20K? What we have can be distribution. Yeah, it's definitely a possibility, but even if it pops up, it could still be distribution. That's my bigger picture here. If we zoom out here, this is the large range here. This is the range from basically right here. Right now, it's from here at about almost 19,500 down here to about 16,100, I believe that is. 16,200. Yeah, this is the big range I'm watching right here. This is a small local range here. But I could definitely see this as distribution here. And the thing is, so you get here and you go, okay, buying climax, automatic rally or automatic reaction, secondary test pulls back. We get this slightly higher high here, which gives us an up thrust. We go sideways here, and then we pump up here for an up thrust after distribution maybe. And then it comes back down. Potentially. There's a lot of volume here at this beginning area here. It's settled down obviously right where we are. So we have to see. But yeah, I could definitely see this potentially being a distribution area here. This right here would just be a small local area within the more important larger area. Let me see here. Hey, Tenet was a good movie, man. I like that. Let me see here. Also a 9 on the monthly. Yeah, I talked about that. Do I put much weight on it? Sure. I put weight. I mean, well, see, here's the thing. TD sequential, guys, as an indicator system, there's so much more to it than just the 9, okay? But I think more importantly, there's a lot more 13s in different ways. There's, believe it or not, there's multiple DeMark counts. You've got aggressives, you've got combos, whatnot. And so they're all kind of all getting to that 13 right now. I think Raul Paul mentioned something about this on Friday. But there's more than just the 9 to it. But when you get to a 9 or especially a 13 at resistance, that's when it is. And right now we're at resistance. Realistically speaking here, guys, the resistance is this all-time high area. And yes, we pushed above it, but we haven't like continued up through it. We're still hovering around this all-time high. It's working as resistance right now. So you're getting this 9 or 13, again, with the combos and the aggressives and all these other ways of counting it that DeMark has. You're getting this cluster of 13s up here in the different time frames. And they're multiple time frames through. And so they're all coming right here at resistance. So to me, when you get that happening at resistance, that gives you more confluence in the idea of a possible reversal. But a 9 by itself really just means a pause. Potential reversal. Everybody has these reversal candlesticks they always talk about. All new traders do. But they're not reversal. They're potential reversal patterns. They're pauses until they're proven to be reversals. And that's the way you absolutely have to look at all these different things. If somebody says, oh, look, it's a reversal candlestick, or oh, look, it's a TD9 reversal. Well, no, it's a setup for a potential reversal. But at minimum, it's going to be a pause usually. Usually be a slight pause at least. And then potentially a reversal. So, yeah. But, yeah, with it being a 9 there, and having a 9 on the weekly just a few weeks back right around this same area, again, hitting the 13s on multiple lower time frames, across the, the combos and the aggressives and all that stuff. I mean, yeah, it seems like there's a lot there to say it should reverse or pull back at least. But until it does, guys, you have to be careful. Remember, this is all just possibilities. As traders, there are no guarantees. It's all speculation. That means there's always risk. You'll never know for sure. That's why risk management is so important. It is the most important thing you guys are going to do on a daily basis as a trader. Stop shunning it. Stop ignoring it. Stop, half-assing it. It is absolutely the way that you make your money, your risk management. Believe it. Everything else is just, the cherries on top. Mechanic says crypto fear and greed index is 94 still. I know that's been up there for quite a while. Hank says if we get rejected here, reversal, not correction, is going to hurt so much. I mean, big effing ouch. Years to recover from that. The correction low below 3,000 is my strong secondary. Yeah, again, and that's the one thing most people don't want to hear right now. But here's the other thing, guys. Everybody says, oh, look, all the institutions are getting in. Everybody's like, oh, yeah, look, the little guy for the first time in history has beat the big guys that got in before them. Do you really think that's the truth? If all these institutions are getting in now, they're not interested in buying up here other than to send it back down here so they can get the rest of y'all out of there so they can get it back down here. Yeah, some of them are ahead of the game. They've been in here prior. Excuse me. But if we're having a large flux of that institutional investors coming in, they're not interested in Bitcoin up here. They're interested in shaking the rest of y'all the heck out of here. They're interested in, in setting you back. In putting you in your place, basically. The little guy's never been ahead of the big guys. And honestly, guys, I don't think they ever will be. The big guys have too much on their side. They've got size. They can market buy at these levels and then shove the price back down your throat. They've got that much size that they can do that. Look at how small Bitcoin is comparatively to everything else. These companies, their balance sheets, guys, their cash reserves are just sitting there. They could tank this to the seventh gate of hell. And most of y'all would sell. I'm going to tell you right now, don't even say you wouldn't. I mean, you're going to say you wouldn't. Most of y'all would. You see this drop below 3, you get really scared. Drop them below 1, you'd really be, it's the toughest of hands to be holding below 1. Get this thing down to $650, $400. There's very few, very, very few retail that would be holding still at that point. Now, I'm not saying they're going to do that. They're going to send it that far, but I'm saying they could. That's the reality of the situation. But this idea that, they're all going to just join in right here, right now, all of a sudden, doesn't make a lot of sense. It's not how they normally operate. Why are they going to do something different now? Could they? Sure, they could. But when it comes to trading, you'd be very suspect when somebody says it's going to be different this time. Be very, very suspect of that. Until it's proven that it's different, be very cognizant of it being basically the same. But, again, most people, retail traders who get into, into trading, they don't have an economics or a financial background. They've never dealt with companies of these size or people that are in these positions. They've never, all this is new to them. So, things sound good. But often when they sound good as a retail trader, it's usually the wrong thing to be listening to. So, but an ABC don't do a new all-time high, so that's BS for you. Oh, and then Hank let you know it's expanded flat. Yeah, definitely expanded flat. But in order for it to be expanded flat, this has to be an ABC here, because this will be A. ABC equals A. Then you have an ABC equals B, and you have 5 waves down for a C. And for an expanded flat, wave B terminates above where wave A begins, and wave C terminates below where wave A ends. That's the expanded part. Wave C is your longest wave. Starts above where wave A started, ends below where wave A ended. Yeah. But, again, you're not the only one that doesn't know that or doesn't understand that or doesn't, see that. And that's why something like that, like Hank said, would hurt a lot. Because everybody's being conditioned right now. Retail's being conditioned to buy the dips. Think about what you see all over crypto Twitter all the time. Every time price pulls back, everybody's shouting, buy the dip, buy the dip. Pomp and James and, all these guys, they're all buy the dip, buy the dip, buy the dip. Well, that's great as long as price goes up. But what if price doesn't? Again, I'm not saying it's not going to, guys, but I'm saying I am very well aware of that possibility, and I tend to keep you all aware of it. If it doesn't happen, you're good to go. No worries, right? No loss. But if it does happen, you knew. You knew it was possible. You were ahead of the game. And you've got a possibility of getting out and maybe shorting down. Let me see here. Hey, what's going on, Onyx King? Tenet was a crazy movie for sure. Let's see here. LXT saying Brexit talks should be done on Wednesday or Thursday of this week. We'll see what goes on with that. Yeah, I think today's DXY is working on 4. I think LXT. I think we're working on 4 there. It shouldn't be done yet. If this is 4, we should be looking for it to get up here. Usually we'd look for it to pull back up into wave 1. So if this is wave 1, we'd usually expect it to get up there. So 92.5 or something at least. If this is an ending diagonal, that coming up there. Sure. So we'll see. That's what I'm looking at the moment. We had a push above the pivot and drop back, but let's see if we can get some, we had the big drop back because we had the big push up. Came back down, to that point of breakout there, finding support on there. So if it can continue up, you may be getting like a leading diagonal for wave A, and then you have wave B, and then you'll have a regular wave C. But I think it's only 3. But again, if we can get up there and get that move up there, 5 is probably just going to drop down below 3. If it doesn't, it goes a little bit lower. We've got those same targets we've talked about. But for right now, until that happens, this makes, perfect sense. Until it doesn't anymore, right? So we'll see. Let me see here. Let me catch up with you guys here. Brian says at 19,000 there is way more risk and low return on investment unless you're investing long term. The thought of doubling from here without a real correction seems improbable. Exactly. But that's how, how retail FOMO works. Remember, guys, I keep telling you, if you're retail, which you are, you're liquidity. You are considered liquidity until you prove otherwise. Because most of retail plays emotionally with it. They don't understand how the game's played or what's going on. If we look at this TPO chart here, again, look, we had this decline back here on Friday to my low area, bounced right in that area right there where I had my yellow line. Pops back up, but look where it pops up. The value area is in line with this value area. We get this value area just a slight bit higher, but still really within this and still below this point of control back here on the second. We've got a small, we've got all these small initial balance ranges here. So what does this tell us? These small initial balance ranges and this little bit of movement tells us that that what you have here is you have a good moving, I guess back and forth you could say, between your other time frame traders, your larger guys, your professionals. You've got your professional guys who believe that prices overvalued up here at the highs, here back here on yesterday. And then you have another group of them. Remember, because they're not all in the same direction, same as retail. But you have another group of them who believe it's well undervalued here at the bottoms. And so that's why you get this small initial balance range right here and a move up to the top and a move to the bottom. Small range overall. Here we are again. You've got this initial balance range. You've got this dropout through it. The first thing you should think of when you see this is price is going to trend down like this. Most of the time, this is what happens. Sometimes you get something like this. But you shouldn't expect for this to end up like this. You got the range down here at the bottom. It's a big move up. You shouldn't expect that. Matter of fact, with all this movement down here, you'll probably get most of your move to the downside, even if it's not that large. So, if I'm looking at this, just off this TPO chart alone, I wouldn't expect any large kind of advance right off of this, which makes the idea of a triangle kind of questionable. It could. You've got something like this right here where you had some movement down. This has gone a little bit further, but nonetheless, it could. You had this one right here where a little bit differently. But generally, when you see that, your movement, whether it's to up or down, is limited. So, we look there. If it can continue down below this one right here, and I got to get ready to get out of here, guys, but if it can continue down below here at about 19,000, this point of control here on the third, if we can get below that, again, you're going to look right here to, to this yellow line here at about 18.5, 18.550. That would be your target. If you're dropping through 19, if I'm looking at this TPO chart, if I'm dropping through 19, I'm looking at 18.5, 18.550. If you lose that, I'm looking down here at this one at about 18.1, 18.150. That's everything outside. Elliott Wave, all that other stuff out of the side. If I'm looking at the TPO chart and we get those drops below those levels, those are my targets that I'm looking for. If we get down below 18.1, 18.150 there, I think you might get a bounce right here at about 17.7. But I think you're coming on down here to this 16.800. So, keep those in mind if it's coming down there bigger picture kind of idea. But we got to see if it comes down. Again, like I said, most of the time, significantly most of the time, you're not going to see somewhere it makes this small, initial balance range and then trends in one way. Most of the time, you're not going to see that. Most of the time, it trends in the opposite way. You get this move down below, and then it trends back up the other way. Most of the time, you're not going to see it. Most of the time, you get the small one, and it trends the other way, in the way of the breakout. The initial balance range are your retail traders. They're the liquidity. Anything outside that range is your other time frame traders. So, yeah. But anyway, you guys are funny. But anyway, yeah. So let me see here. Why give a chance for retailers? Let me kind of catch up with what you're saying here. What if they want to create FOMO and just pump? They might fill their bags at 3,000 and fill and sell and want to sell higher. Pump is more painful scenario for the average Joe, in your opinion. There is no sense for you that they kill the market now, create FOMO higher and higher, and make the rich richer and the poor poorer. That's how markets work, in your opinion. Well, that's your opinion. I mean, that's okay to have that opinion. The importance is where we're at. The importance is where we're at. We're here at the all-time high. And retail's beyond bullish. All you have to do is look at crypto Twitter or whatever. You give it a little bit further push up, say maybe to 21, maybe to 24,000 as I talked about. That should be enough to pull in retail. And then you just kind of send it back down the other way. And they won't sell. They won't sell because they're buying the top again. And they think it's going to continue up because it's new all-time high now. And even if they've heard about the possibility of an expanded flat, they've written it off as something that can't possibly happen because it doesn't fit their narrative. Because it doesn't get them wealthy overnight kind of idea. Because it goes against them. So yeah, you know, if you keep sending it down here little bit, they keep buying the dips. And if they keep buying the dips, they create liquidity for a move down. So if you're here, if you're buying the dip here and here and here and here and here, they send it down. This becomes a cascading order of liquidations and or sell orders as they rush to cover, which gives it fuel to get down to this area here, which then sets these down further as well. You know, more fuel to send it down lower. And still, everybody keeps buying the dip because they've been conditioned to do so because they think that this can't be the top, possibly that it has to go higher. And again, it may not be. It may push up higher from here. Again, to potentially 21,000 or so, or even 24,000. But remember, every time this thing's dipping here, now that we're above the all-time high, you got retail buying. They're ravenous. But retail doesn't have a lot of money. They talk a lot, so everybody thinks that everybody's doing the same thing. But, they're not. So, yeah. I mean, guys, you have to understand, it's a very speculative market. And, you got to be careful when you're coming, especially into a speculative market like this. Guys, listen, I'm going to go here in a minute because I'm already running over. But at the end of the day, Bitcoin is not a store of value yet. People are trying to say it is. You've got news articles on Barron's claiming that it is. And then it's not that Barron's is, but, some analyst they talk to, some Yahoo says that it is, but it's not. It's a speculative asset. A store of value does not lose 90% like that. It doesn't consistently get 60% drops like that. But Bitcoin does. You have to have more stability to be a store of value. All right? And so it doesn't have that yet. Now, I'm not saying it can't become, and I hope it does. Again, guys, just because I'm being honest with you about the realities of what may be going on in this area doesn't mean I'm not bullish overall for Bitcoin. I'm a big fan of Bitcoin. I hope it works out. But I'm not stupid enough to put my money in here and just leave it in there and think that nothing can possibly go different than what I think. And I'm going to, own 7 islands by the time it hits $100,000. That's just asking to lose money. Don't put yourself in a situation you don't have to. Stop being a sheep and following what, the feel-good stuff that crypto Twitter gives you all the time. They pat the top of your head and tell you what a good boy or good girl you are. Such a good boy. Such a good girl. Go buy another dip. Oh, you're doing it right now. Yeah, you got it going right. You know what you're doing. Don't listen to that nonsense, guys, because you know what? When the market turns on you, if it does, they're not going to be there helping you get back on your feet. They're not going to be over there giving you the money back that you lost because you believed when they were, all the Yahoo kind of thing going on. They'll jump back to the, it's a longer term play. You have to buy the other dips too. It's just a little bit dip. The charts will get longer term. They'll zoom out. Oh, but see, it's just a small dip in the grand scheme. Zoom out to 2010. That's what they'll tell you. And then they'll be quiet when it gets down to 3,000, 2,000, 1,000. Again, if it does that. I'm not telling you it's going to. But if it does, this is what's going to happen with those people that you're following blindly while they tell you to buy all the dips without any thought, without any understanding of what may be going on. It's fine to buy the dips as long as you know when you need to sell what you've bought. That's fine. And you know what? If you're going to buy now and hold for the next 10 or 15 years, you know what? Then even if it does make it to 24 and then dip down to 1,000, you're still fine. But you've wasted a lot of time holding while it drops from 24 back to 1 and then goes back up. You've wasted a lot of time. Kind of like if you bought in 2017, just kind of held and went back up, and what all that. But again, if an investor, then that's the idea. You buy for the long-term hold. You don't worry about what goes on in your day-to-day. So if the average wallet is in at 77.45, you put a stop loss at what? I wouldn't. I go what's on the chart. I wouldn't go with what some average wallet says. That gives you an idea of an average area that you may have to watch, but, again, how wide is that range? Average wallets don't mean a whole lot. They give you a general idea of where below at some point panic may set in. But if they got in at 77.45, they're probably not getting out right at 77.45. Price comes against them because they didn't get out up here. And so psychologically, human beings are going to pay attention to, they're going to think that they lost all that money from where they entered at 77.45 to 19,000. Instead of thinking, okay, I need to get out and reassess, they're going to say, oh my God, I lost all that. Please, God, please let it just go back up above my entry and I promise I'll get out. And they won't. Or they sit there and go, oh man, this is just a dip. It'll be up fine. It'll be just fine. And they'll find any narrative they can which supports the idea of a reversal pretty close to them. But they won't sell. Panic selling, I think, will start at, between 3,000 and 4,000 if you bought in at 77.45. Average retail trader. Because at that point it becomes, oh my gosh, we're back where we were in November at the lows in November or December of 2018. Oh my God, we're probably going lower. But even then, they might still holding, hoping it bounces at 3, hoping it bounces at 3, and then panic sell when it drops below. That's generally the way human beings act. It's emotional. The only thing different from 2017 is that it seems that people get more time to exit around 19K. Not sure if that means anything though. If it is a reversal, if it is a big reversal coming here, like a major reversal macro, all it means is, you've got more people buying in because it's right there above the all-time high and they think it's going to go higher and everybody tells them it's going to go higher. So you've got more opportunity for those who have the asset to sell it. They got more people coming in so they can sell more at these higher prices rather than having to sell it at lower prices as it goes down. That's all. If that were to happen, that would be why. Whereas in 2017, it was the end of the run. It was that blow off. That was it. It was like boom, pop, it was done. So yeah. Let me see here. But anyway, LXT, have a great day, man. I got to get out of here, guys. I'm 15 minutes over. I've been here a while. But listen, guys, if you want to join us, howtotradetowin.com. You can jump on over there. You can see what we offer. Scroll down the page, see what we offer. Join us. We'd love to have you. You can click on this right here and jump onto our server. Hit that connect button. It'll take you to the free side over there. You can jump in and we've got a free trial there. Just follow the directions. If you have any issues, you can send a message to Adam Harris or tag him, and he'll help you out with that. But yeah, jump on in there, see what we got to offer, talk to people. We've got a channel in there where people kind of put their thoughts. Good vibes is what we call it, and so you can check in there and see what people think. But yeah, we'd love to have you there. Just remember, guys, at the end of the day, no matter how the charts look, especially if it's bullish, no matter how bullish they look, there are no guarantees, okay? And so what that means is risk management is absolutely the most important thing you're going to do. The only thing you control in the market is how much you lose. That's it. So start taking it seriously. Get to work on that, on your risk management, so you can make sure that you're not giving the market money that you don't need to give it, all right? You guys have a great day. Thank you so much. Appreciate you guys joining in. We'll be back on Wednesday, 11 a.m. Central Standard Time. Take care.